Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we have a impulsive structure to the downside in A or 1, looking for a 3-wave corrective structure to the upside in B or 2, before then continuation down again in a wave C or a wave 3, where especially a wave 3 can lead to much lower prices. The common target area for a wave B is between the 382 and the 886 Fibonacci, taken from the high to the low of A, giving you an area between 42.5k and 47.9k. Common target area for a wave 2 is between the 05 and the 786, which is between 43.8k and 46.8k. Of course, this area is quite big, and that is why I have certain resistance areas here highlighted, specifically 42.5k to 42.7k, 43k to 43.2k, and 45.9k to 46.7k. You also see the vertical lines on the chart. These are Fib times taken from the high to the low of A or 1 to compare the time it took to develop A or 1 with the time it is taking to develop this wave B or wave 2. By far most commonly, a corrective structure is ending after the 0.382 Fib time, which is currently sitting on Sunday the 28th of January at 5 a.m. Central European Time. This means that if price would push towards the upside tonight and hits this area, starts ranging and moving to the downside, probabilities will be higher to still see another surge towards the upside to higher levels for this wave B or 2 before we then get a retracement to the downside. In the bullish scenario, we are not looking for an impulsive structure to the downside. Instead, we are looking for a corrective move in a wave A, B, and a wave C. The most common target area for wave C is between the 1 and the 1.236 trend-based Fib extension, taken from the high to the low to the high here, but instead price turned around at the 0.618, which is a rare target for a wave C, which does impact the probabilities for this particular scenario. We are then looking for a wave X to the upside. Also preferably, this wave X is finishing after that same 0.382 Fib time. The target area for a wave X is also very big, just like a wave B between the 382 and the 886, but you can see that only one Fib over here is highlighted, and that is the 0.7, because if we are looking for a sharp corrective structure to the downside in a double zigzag, which is a zigzag in W, corrective structure in X, and then another zigzag structure to the downside in a wave Y, preferably wave X is not reaching the 0.7 Fibonacci. The moment the 0.7 Fib is hit, probabilities go down for a zigzag to the downside in a wave Y for then a sharp double zigzag corrective structure, and the probabilities for this wave Y become higher for a flat structure or a wave Y. If we then zoom in to the lower time frames, then we have two bullish scenarios. The first one here is an impulse to the upside in a wave 1, 2, looking for a 3, 4, and 5. Usually the minimum target for wave 3 is the 1.618, sitting at 42.8k, which is in confluence with this target box over here, which includes that weekly naked point of control and the current monthly naked point of control. So that is quite interesting resistance, after which in this scenario you then want to see a corrective structure in a wave 4, before then another impulse to the upside in a wave 5. What is important for this wave 4 is that it is not hitting the 0.618 Fibonacci, taken from the low of 2 to the high of wherever this wave 3 is going to be. The moment price starts ranging, as that is what we're looking for when price is moving to the upside, we want to wait for a range to give us more clarity about this being an ABC or an impulse. The moment it starts ranging, we don't want to see price moving to the 0.618 in an impulsive structure. Now here we are then looking for a 5-wave A, 3-wave B, 5-wave C, where we don't expect this low to be taken. And the same is true in this scenario here, but now we're talking about a double zigzag. The low won't be taken, but we have an ABC to the upside, 3-wave structure in a wave W, looking for a 3-wave corrective structure in a wave X, where again we don't want to see that 0.7 Fib hit, after which we then look for another 3-wave move to the upside in a wave Y. Common target area here for your wave X, if price can make it to the resistance area here at about 42.7k and reject, is between 41k and 39.9k. If we go to the bearish scenario, then we are looking for a flat structure. The moment probabilities really increase for this to be an ABC, which at the moment would be higher probabilities because we don't yet have a potential 4 and 5, it opens the door for a potential flat, which therefore is the bearish scenario, as we are looking for this low to be taken. ABC to the upside, ending inside the target area for wave C. Then we want to see an ABC to the downside, preferably in this wave B, as the most common pattern in a wave B is a zigzag structure, and the most common target area for a wave B is between the 1.236 and the 1.38, taken from the low to the high of A, which is in nice confluence with this yellow support box over here, sitting between 37.7k and 37k, after which we then want to see an impulsive structure in a wave C to the upside. Now, we currently don't have any local CVD divergences, but before this push to the upside, we did have a bullish and also one bearish CVD divergence. Now, the first divergence was the bearish, so that one gets priority over this bullish CVD divergence. But the moment price is moving to the upside, having a bit of a move to the downside here and creating a second bullish CVD divergence, that is when the probabilities change for a move towards the upside. And also what happened locally, which increased probabilities for price to move up, is that price hit the 886 Fibonacci. The 886 is very well known on this channel, as the moment the 886 is hit, probabilities increase to take this high sooner or later. Now, we didn't have to wait too long as price moved up, took the high, little rejection, but eventually we continued towards the upside. And if we then look at the probabilities of the different scenarios, then both low time frame scenarios follow pretty much the same route, so we need to be patient to see what scenario has the highest probability. We have the ABC 1, 2, 3 scenario, as well as the WX and then eventually a wave Y scenario. But in generally, it means that we are looking for more upside to come and for the corrective structure to finish at least after the 0.382. On the micro, we are waiting for a range to form and eventually a bit of a retracement, which will give us more information about if we have an impulse 1, 2, 3, 4, 5 or an ABC. However, as it stands, probabilities are higher for this to be an ABC structure to the upside. 42.6k is a very, very interesting resistance with the weekly naked point of control, and also the weekend is coming up, so generally we can expect a ranging structure throughout the weekend, and then we will take it from there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.